Hi everyone, welcome. Thank you so much for being with us here today. This is SmartCrowd's first live webinar. We're super pleased to have you all with us.
Yes.
My name is Hassan. I'm the head of business development here at SmartCrowd.
And my name is Ammar. I'm the head of client relations here at SmartCrowd.
So before we begin and dive into what we're doing here at SmartCrowd, why real estate, and all the other important information that of course that you all want to learn about, we thought that would be great for us to introduce ourselves and explain a little bit about our backgrounds and what we've been up to before SmartCrowd and now during SmartCrowd, of course. So I used to work at a Big Four, Ernst & Young, for a number of years, and if for many of you who may not know of Ernst & Young, it's a financial services firm. So worked there for many years in the Middle East, and then went off to the UK, worked there for a startup specifically in the artificial intelligence space, and then decided to come back to the UAE and of course joined SmartCrowd, which I'm super excited about.
Perfect. So my story started on a cold winter's eve in February. No, I'm just kidding. So my background's actually been in finance. I grew up in Canada. I'm originally from Pakistan, but I moved there when I was 6. Stayed in Canada till about last year. I worked for Royal Bank, which is the biggest bank in Canada. A lot of wealth management. I kind of dabbled in a bit of everything, actually. My first role, I kind of got to do everything, get my feet wet. And then after that, I moved to a wealth advisory firm in Calgary, Alberta. Worked there for about 3 years, and then this past January, I kind of migrated over to this side of the world. And me and Hassan actually, oddly enough, started almost on the same day as SmartCrowd.
Exactly. So good things happening here at SmartCrowd, of course. Ammar is the face that you saw on the cover. I wasn't good enough to make it. Not a pretty face. So we're super excited to have you guys. One of the things that we do want to start off with, of course, is to share with you the SmartCrowd story, right? So Ammar, maybe you want to take it here in terms of why SmartCrowd started, how it started, and essentially what's the ethos and reason behind it.
No, for sure. So as the legend goes, and I laughed when I first heard this, but so Sadiq, our founder, a couple of years ago, he was very interested in buying into real estate, and he kind of explored his options, and what he found was the startup cost to get into real estate is super high for everyone. And at some point, he thought there must be a better way.
Yeah.
And that's really how he got to thinking. He started looking at different options out there, what he could do. And that's really how SmartCrowd was born, where he figured there must be a lot of people in his position who wanted access to real estate, but there was no way for them to get in.
Yeah, exactly. So it really, SmartCrowd started out of a need. It was a desire, of course, a personal desire of our founder, Sadiq Farid, who is, by the way, a finance guy himself, right? So super smart guy. We're not just saying that because we work for you, Sadiq, but he's a super smart guy. Absolutely, one of the things I think what's great about SmartCrowd, especially that I'm working here, is just the transparency, right? With the team, with everyone that's working towards this particular mission that we have in terms of making SmartCrowd and real estate investments more accessible to people. And that's what we're really after here, to make it accessible to the masses. Because traditionally, Ammar, as you might know as a wealth advisor, real estate has been there generally for the wealthiest people, right?
For sure.
Those people in the middle income brackets who earn fairly well, but may want to diversify their investments, which we'll get into, of course, may not have the opportunity to invest in an asset class like real estate. So that is the problem we're trying to solve, and we're super grateful for all those people that have been with us on this journey so far, and definitely look forward to having more smart crowders with us. With that said, what I'd like to get into as well is we have a link in our description, right? So of course, we've got many of you with us here today. So what I would like to request you all to do is if you could just register. It's super quick. I promise you. You'll just ask your name and email address. And if you could leave that with us, because what we'll do is after we're done the webinar, Ammar, as our first webinar, as a courtesy, and we're super excited, we'll send all of you a free gift. Right, and of course we want to be able to do that because we want to encourage as many people to come on this investment journey with us. So please do that. It's links below. Just sign up, register, name, email address, and it's simple. It'll take you 2 minutes or less than that, in fact.
Yeah, for sure.
Perfect. Now, before we start diving specifically into real estate, Ammar, as a wealth advisor, what is the first thing that you start off with when you start consulting your clients in terms of their personal finance matters?
No, it's actually been really interesting. I think I've been advising clients for about 8 years now, and I guess my thoughts and the client's thoughts coming into it are never the same. Because when you talk to a client, one of the first things they'll ask you is, Ammar, what should I invest in? And you kind of have to work backwards, because my first question to them is, why are you investing? Right? Because really, depending on your situation, there's going to be a lot of options open to you, and no two options are really the same, and no two situations are the same. So when I talk to clients, really I like to work backwards, like, why are you investing? What's your goals for investing? What's your time frame? So after we build your entire story, that's when we actually start looking at investments. But yeah, I don't think there's any perfect investment out there, because if there was a perfect investment, that would be the only one out there. So the fact that we have so many variants of investments means that there's an investment for a specific situation, but you can't look at investing as one thing that will kind of solve all your problems. You have to look at your entire options.
Exactly. And I think one of the analogies that you've used previously in our presentation, which is really good, is, if you wanted to get from here, let's say we're sitting here in Dubai, and you wanted to get to Paris, right? That's in France. And I've seen Ammar use this analogy, which is great, is, you would use different modes of transport to get there, of course. You would perhaps take a taxi from your apartment to the airport, and from the airport, perhaps then, a plane, of course, to get to France. Then maybe you might get a hop on a train. So the point is, you take different modes of transport for different goals that you have set out for yourself at a particular point in time. So that's to say that, when we speak about investments, even as SmartCrowd, even though we're in the real estate, or we're providing real estate investments as an asset class, we're not here to say that, you should invest all your eggs or put all your eggs in real estate. We're here to say that, of course, that real estate should be a part of your portfolio, which we'll get to in a minute. So I think that's actually a great segue into it, right? I think this is the reason why people have tuned in. They want to understand a little bit more about real estate specifically, because I think it's tangible. People understand it a lot better. So why does real estate, Ammar, make sense as a personal investment, and why should people be looking at this as an asset class?
I guess just to start off with, I think you have to look at real estate and the way people are using it currently. So most people at some point in their lives, they do end up investing in real estate. But mostly that's for the house you live in. So you're not exactly taking advantage of the whole asset. Like, you're living in the house, but the way real estate is good is you actually get a short-term income. So if you have a rental property, you'll be getting a regular income throughout your investment. And then at the point where you hope to sell, ideally the house price will be higher than when you first bought it. So most clients, most people in the normal income bracket, really, when they invest, they only get to take advantage of half of the actual asset, right? Because you're going to be taking advantage of the capital appreciation, layman's terms, if the house price goes up, but you won't get that rental income, that regular income. So that's really one of the advantages of real estate. Now, I guess getting a bit more technical, most people have access to different asset classes. So you could be looking at equities, you can be looking at fixed income, you could be looking at cash instruments. Now, all these different asset classes, they have a relationship with each other. So, for example, bonds and stocks, they usually work opposites. So when the stock market is doing good, bonds usually aren't. When the bond market is good, stocks usually aren't doing good. Cash is pretty safe, so that's a slow and steady type of investment. It doesn't really earn you anything, but safe. Now, the good thing about real estate is it doesn't have a correlation really with the other asset classes. So if stocks are up, doesn't really affect real estate. Stocks are down, doesn't affect real estate. Bonds are up, bonds are down, doesn't affect real estate. So in your portfolio, it's very important to have things that aren't correlated, because if you have a high correlation, when times are good, you could be doing great, but if anything bad happens, your entire portfolio goes down. So that's the point of diversifying, really, right? So you're kind of prepared for every situation you come at, and everything's cyclical. Everything is cyclical, and that's really how our world works. So at some point, things are going to go bad, and I know we like to think of the best case situation, but sometime in the future, things will go down. And
Yeah, they're markets. I mean,
Yeah.
as you said, they're cycles, and then that's natural part of every economy, of course. One of the things that I wanted to allude to was this graph. So what are people actually looking at over here, Ammar? Do you want to explain this a little bit more to them?
Yeah, so this graph basically breaks down the returns over 100 years. So the stats have been calculated, and I think one thing that surprised me as well is real estate actually outperformed equities, because whenever you're looking at growth, equity markets usually are what people focus on, right? Now, this is actually based on not the type of real estate that people usually buy, which is their house, because that is going to be your capital appreciation. And as I just mentioned, that's about half your returns. So the other half is that rental income. So if you actually buy an investment property, at most times it actually outperforms equities.
Fantastic. So what I'm getting now is, what I'm understanding is that real estate makes a good investment, or is a good investment class, in fact, because it helps us reduce risk in our overall portfolio. As you said, it doesn't necessarily move with either the stock market or the bond market. It kind of holds its own. So it's a good way to, of course, hedge yourself, or just, kind of reduce your risk exposure, of course.
Yeah.
And the other one that you actually just mentioned right now, which is really important, and I think it's super important for people to understand, is the reason real estate may be a good investment decision for you is because it provides you the opportunity to earn from rental income, as you said, and you can dispose of it or sell it at a higher price at a future point in time.
No, exactly.
Right? Fantastic. So I think what we also want to explain now is we've kind of touched upon, why real estate, of course.
And I guess one thing I did forget to mention, which I'll just mention, is we always, when you look at investments, or when a client looks at investments at least, we always kind of focus on the return. So we'll kind of focus on what we're going to get. But the other part is risk. Like the way investments usually work is the more risk you take, the more earning potential you have.
Right.
So when compared to equities, real estate doesn't fluctuate as much, right?
Yep.
And the return is better. So if I told you didn't have to take as much risk and you could get better returns, it kind of makes sense when you look at it that way.
Right.
And a lot of people haven't had a chance to look at it that way.
Correct.
Which is part of the problem we're actually solving.
Yeah, fantastic. I think one of the questions which we will actually just answer right now, by the way, feel free to ask your questions and we'll get to them as and when we're uncovering these specific topics that we're touching upon today. So the question we have is, what is a REIP? So if you can explain a little bit about what a REIP is, because we've heard of REITs and we're not going to get into those, but what is a REIP, Ammar?
So REIP is actually a word we made up. You made up, actually. I'll give you credit for that one. I'll give you credit for that one. But as everyone hears about REITs, we thought we're coming up with a new platform. We're coming up with a new way for you to invest. So we would come up with a new word for what we do. So REIT basically means real estate investment platform. It's basically what we do. And it's going to be a word when you start seeing it around, you'll be able to tell that it's us, what we're doing.
Yes.
And
so that's essentially it. So it's a real estate investment platform, as we're seeing a lot of products, and there's a lot of digitization of various different financial assets, of course. So the way we do this now, of course, this is the exciting part, which is why you're all here and attending and listening to us, is how we do it in the first place, which is crowdfunding, right? So I think we need to explain a little bit about what crowdfunding is, because this might be a new concept for many of you. Simply, crowdfunding is essentially allowing a lot of people to come together, pool in their capital, resources, money, whatever it may be, to purchase something, right? So we've seen this crowdfunding model in various different things. So some of you may be familiar with Kickstarter, right, as well. Right?
Kickstarter has been huge. I think that was the first one I heard of as well. And obviously I was in Canada at the time, so you could really start a Kickstarter for almost anything.
Exactly. So if it's something that many people want to purchase collectively, and maybe perhaps that thing or asset, in the case of us, is real estate, might be out of reach for one person or a couple of people to purchase on their own, right? So what we allow as SmartCrowd is essentially we use a crowdfunding model where many people can come together and purchase real estate investment properties. It's quite simple.
No, for sure.
Right. So I think on this level as well, what we want to start off with is that's crowdfunding in a nutshell, right? People, I think, understand that concept. How do we invest now? If we look at SmartCrowd specifically, if we wanted to see how easy is it to invest on a platform like SmartCrowd, and how does that system, or how does that crowdfunding structure actually work? So if you can elaborate on that, Ammar.
So I guess I'll kind of walk through the process that you guys would go through if you wanted to register for a platform. So you would go on the platform, you would register. It's a very quick process. It takes about 5 minutes. I think it's 5 actual steps as well. After you've registered, you go on the platform, and one of the unique things about our platform is we kind of give you the power. So we don't choose what you invest in, you get to choose. So we provide you options. So you're in charge of your own investments, and we just provide the platform for you to do it. So after you've looked at a property and you've decided to invest, you basically do the investing, and after that it's really hands off. We take care of everything. We take care of the property management. As soon as the rent comes in, the dividends come in, go straight into your wallet. And then at the time you do want to exit, you also do it through the platform. So really what we're trying to take care of is, at least me, I'm all about convenience. I don't like to spend too much time on things. So what this platform allows is you to basically invest in probably 10 minutes. And after that, you don't have to keep up with it. All your payments are made straight to you. And yeah, you let us handle all the hard work.
Fantastic. So it's essentially what we're doing here is, as Ammar explained, it's a end-to-end process where SmartCrowd facilitates this whole entire process for you. So the way it works, and now let me elaborate a little bit more about the structure, right? How we've structured this as SmartCrowd. So essentially what we allow people to do very simplistically is purchase or invest in real estate without taking on any leverage or any debt, right? You can simply put in as little as 5,000 dirhams, which is a little less than $1,500 for those of you that might be outside of course, the UAE who might be tuning in. So for less than that price, you can effectively purchase your own real estate investment, and you can reap the benefits of these through dividends, through rental income, and of course, at a future point in time, you'll be able to sell your shares. So now how the whole structure actually works is it initially starts off with us finding various different properties, right? And so what we do is we analyze hundreds of different properties using our own proprietary screening tool, right? Which uses over 100 different data points. So this is all using data analytics. This is using the digital platform. Of course, this is something that you don't see. We've got a team that's sitting here that's doing all this analysis for you, the due diligence. So once we see certain properties and we vet them for their investment attractiveness, we then put them up on our platform, right? And so this is where essentially you as an investor, when you browse or you come onto our platform, this is where you see the real estate investment options in front of you. These are pre-vetted, again, real estate investment options. So once again, you can be assured that these aren't just simply being put up on the platform, but this is something that SmartCrowd is doing their due diligence and analytics on.
No,
right?
For sure. And I'll just break it off for a second here. Imad, I saw you had asked a question that we're not being overly interactive right now. So something we mentioned at the beginning, which you might have missed. So any questions you ask, we're going to get to it at the end, and that way everyone can ask their questions. So we'll kind of go through all the information, and then everyone save up their questions, write them down, and we'll go through all the questions at the end. So don't worry, we'll get to them.
We'll get to them. We promise. So that's very important, and we apologize for that, but absolutely, we're going to get to your questions. We're definitely seeing them come in, so we thank you for that. So once we vetted the properties, they're on the platform. Now this is the point where effectively people are able to look at which property they want to invest in and invest, right? So it's all a digital platform, essentially. That's what we're doing. So Ammar, do you want to talk about exactly how this is structured? Because I think a lot of the confusion or some of the questions people ask is that property owned by me as an investor? Or how does that actually work for SmartCrowd when I choose to invest? So I'm Hassan, I want to invest in SmartCrowd. I put in 10,000 dirhams or 20,000 dirhams. What does that mean for me as an investor? Do I own the property?
The straight up answer is yes. Okay. It's a little bit more complicated than that, but I'll try to do kind of a high level explanation of it. So first thing we do is gather funds. So the entire crowd, basically you put in however much you want to invest. And once the property is 100% funded, that's the point when we buy the property. Now you're probably wondering, how do we put 50 people on a property? So that we have to do a little bit of gymnastics too. So we have to get this set up through the DFSA. So imagine yourselves here, you guys are the investors, you paid up for the entire property and the property is over here. Now there's something in the middle It's called an SPV. It's a special investment vehicle. Very easy way to look at it. Think of it as a company. So investors are here. You guys have invested. There's a company in the middle, and the property is over here. So the way it works is this company owns the property, and you guys are the shareholders of the company. Now, where does SmartCrowd come in? We're just the administrators. So again, if we use the company analogy, think of yourselves as the owners. We're the CEO. So we run the company, but you guys are the actual owners of it.
Yeah. No. So
Yeah.
I think that's pretty clear in terms of how the ownership structure works. Of course, you guys can have more questions on that, and we'll be more than happy to elaborate further on that. So I think from a structural perspective, that's true. You mentioned DFSA, and just for those of you who might not be in Dubai, DFSA stands for Dubai Financial Services Authority, right? So those are the regulators. We're regulated by them, and we're registered here in the Dubai International Financial Center. So as you can see, we're based out of FinTech Hive, and so this is where we're seated here tonight with you. So that's one of the common questions that we received. And another common question, which we actually just received as a question, which is something I was going to get to, is can I exit anytime? So I've purchased or I've invested in this property, right? I will start seeing my dividends or my rental income come in through my digital wallet, right? Which I can withdraw at any time, which is great about SmartCrowd as well. Can I exit now at any time? I've done it today. How does that look like, Ammar?
No, unfortunately, you're locked in for life. No. Just playing. So there is no lock-in periods with us. I know on the website you guys see a 5-year holding period. So that holding period is more of a recommendation, because really when you invest in this product, I want you to look at it as if you invested in a property of your own. Now, if you went out there and bought an apartment, you wouldn't be looking to sell it in 2 months. That's not really how real estate works. But when it comes down to it, there's no holding period. We don't make you stay there. If you need to sell in 3 months, you can sell in 3 months. If something comes up, that's completely okay. Again, that's not what we recommend, but you can do it. You can sell in 2 years. You can sell in 5 years. So you guys remain in complete control of it. We don't set any standards like that where you have to get out at this time or you have to stay in for this time. You have complete flexibility.
Yeah, fantastic. Because I think that's where a lot of confusion happens when people see that sometimes on our website and they say, hey, what's the 5 years about?
Exactly.
Right? And it's a recommended holding period once again. And the reason we recommend that is because real estate is a longer term investment. As Ammar, I'm just going to reiterate what you said, so I might sound like, I'm just a parrot, but the fact is, if you're going to invest in real estate, think of it as not owning just shares in that property, but in fact, you're the owner of that property, right? So if it's your investment or your earnings are proportionate to how much you can invest, but it doesn't change how that investment acts. So you should still be thinking long term when you invest in real estate in general. We're just making it more accessible for people through crowdfunding, through a REIT, which is a real estate investment platform, of course. All right, so I think one of the questions we can get to right now as well, and because some of the questions we'll answer at the very end, some of them as we're discussing these topics, which are very relevant, is one of the questions we received was, you said that, that when people purchase or invest in a property, that they're owners of the property, but now you're saying that they're actually shareholders in a company. So which is it?
So I guess basically, sorry guys if I wasn't clear about that. So you guys are the owners of the property, not our companies. You're not investing in SmartCrowd at all. Yep. It's just the way we have to structure this entire process to get that many investors. And I'll go through it again. So again, there's the investors, there's the property, and in the middle, there's a special investment vehicle. That special investment vehicle basically owns the property, and you guys own the special investment vehicle. We kind of need that in the middle so we can get so many people on one property, because if you go try out to buy a property with you and your friends, you can't get 20 people on a property, right? So we had to structure it that way. But overall, you guys are the owners of the property. We don't own the property at all. So you guys are the direct owners.
Yeah,
I guess that's pretty much it.
Exactly. So I think that's pretty. So yeah, you don't invest in SmartCrowd. It's a special purpose vehicle that we create, which is a separate business. So you can look at it that way effectively, and that owns the property, and you're effectively a shareholder in that. So as Ammar stated, that you are the shareholders and you are the owners of that real estate investment. Now, this is something I was going to get to, because we get this of course, people want to ask, well, fine, SmartCrowd is facilitating this whole process,
Yes.
right? So we're not the ones who are owning the properties. We have nothing to do with that.
Yep.
So how does SmartCrowd make its money, and what are our fees? How
Okay.
does that fee structure work?
Okay. So obviously our fees are very transparent. If you go on our website, there is actually a page that says fees, and all our fees are listed there. But to break it down for you, at the time of investment, it's 1.5% of your initial investment. Easy way to look at it, if it was 10,000 dirhams, it would be 150 dirhams at the time of entry. And then at the time of exit, it's 2.5%. So again, if we use 10,000, it would be 250 dirhams.
Perfect.
And the last fee, which is completely separate, and it actually has to do with the other side of the business, is 10% of the rental income. It goes towards property management and the cost to run the SPV. Now, on our website, I'm sure a lot of you guys have been on there, it shows a net dividend and a gross dividend. Now, gross is the rent before cost. Net is exactly what's going to end up in your bank account. So really what I would be looking at is the net dividends, because that's exactly what you will get paid out.
Yeah, fantastic. And one of the points we also wanted to just mention, just from a clarity perspective, because we're getting some questions on this in terms of ownership, is you can go to the Dubai Land Department and it actually has your name as an owner on that property.
Exactly.
So it doesn't get any clearer than that, right? You can go into the land department effectively and it has your name. So that's pretty clear and transparent structure from that point of view.
Yeah.
Now, from our fees perspective, you touched upon the fact that, of course, our fee structure is 1.5. So what I'm getting is 1.5 when I purchase a property.
Exactly.
Correct? Okay. And then every year, let's say from a admin point of view, 10% of the rental income.
Exactly.
Correct? And then after that, whenever I choose to sell that property, it doesn't have to be 5 years. So I want to sell it, let's say, in 7 or 8 years' time.
Exactly.
And let's say that 10,000 dirham property becomes 12,000 dirhams, right?
Yeah.
So now you would effectively take 2.5% of that 12,000.
Exactly.
Okay, fine. And there's a particular reason that we're doing it this way, guys. And this is really important. And it all comes back to our interest with the interest of you as an investor, because we want everything to be super transparent and we want everyone's interest to be aligned and to be on the same page. So there's a reason why we structure our fee structure this way, right, Ammar?
Yeah.
Can you explain to our tuners or people who are viewing us why exactly we've structured 1.5 at the beginning and the majority of it 2.5 at the end?
Yeah, so I guess one thing I would say, there's a lot of different fee structures. Some of them are upfront fees, some are back-end fees. We've kind of done it both ways, because what we figured was if we put all our fees up front, really we make our money at the point of transaction, and then we don't really have any motivation.
It's almost like a broker, right?
That's what I mean. That's what I mean. So we wouldn't really have too much, not saying we wouldn't, but we wouldn't have as much motivation to keep the investment going at that point, because we've already made all our fees. So the way we thought it was fair for us and our clients is we kind of align our interests with yours. So half the fees at the front, which is the 1.5, and the 2.5 is at the point of exit. And the reason for that, you can look at the properties we're choosing, because we're going to choose great properties because we actually get paid when that property grows. So if you're making profit, we're also making profit.
Yeah.
And that way we're kind of a team working together as a goal, right? Instead of us making our money at the beginning and then you having to go through the journey, we're kind of going through the journey with you.
Exactly. We don't want to just sell you a property as a broker and then just exit and run off and then kind of leave you hanging with the property and then you're kind of on your own. We want to be in this together as a team. One of the questions we've received as well is in terms of property ownership, right? So obviously SmartCrowd uses a crowdfunding model, right? How much of the property can I purchase as an individual, Ammar?
Perfect. So the maximum amount you can purchase out of a single property is 24.99%.
It's very specific. Tell me more.
No, yeah, we randomly just pulled that number out of a hat. And no, the reason for that number is at a certain point, which is 5 years, there is a voting system that takes place. And what that voting system determines is if you guys want to stay in the property or if you would like to get out. Now, if the majority votes to get out, basically what we do is we list the shares back on the platform. Our new users can buy those at that point. And if you're one of the people who didn't want to sell, you can keep your shares, and the 51% will go on our platform instead. Now, if we let somebody have 51% of the property, they basically control that entire property. All the decisions that are made with the property, they could choose when to sell, they could choose everything, right? And since this is crowdfunding, we want everyone to have a voice. So that's the way we broke it down. So you only got 24.99 per person.
So basically that means is that if you want to invest in any property, there needs to be a minimum of 5 investors, right? And this is, once again, as Ammar simply explained it, it's there to protect the rights and interests of the minority shareholders.
Exactly.
Right? One of the questions we're also receiving right now from Mohammed, which I think we can kind of dive right into the Q&A, because a lot of these themes are cropping up, and we had this planned the same way, is the frequency of payments and whether we receive, how we complete the transactions through checks, or is it a cash or bank transfer, and how does the whole digital wallet and everything work? So how do I purchase a property? What is the process to get that done? And what can I expect?
Okay, so to purchase the property, you would really go through our platform, choose which property you want to invest in, choose invest now, and what we will do is we will provide you a reference number, and we'll provide you bank details. So the actual transfer happens, it's a bank-to-bank transfer. It's not anything online that you guys have to be worried about.
And we don't store the bank details as well. I think that's very important to say.
Exactly. And yeah, it's going to be a bank-to-bank transfer, very safe. You're not doing anything online. The second question we got asked is the frequency of payment. Now,
dividends, I think, specifically.
Dividends, yes. So basically, in Dubai, as you guys know, some properties are rented on 6 checks, some are rented on 4 checks, some are rented on 2 checks. Now, this information will be disclosed to you before you invest. Now, if your property pays 6 checks, you'll get 6 payments. If your property pays 4 checks, you'll get 4 payments. If your property pays 2 checks, you'll get 2 payments. So really, it'll depend on your property and how many checks are paid by the tenant.
Yeah, so it's all on the tenancy contract. And this is something else that comes down to the transparency and all about what we're trying to achieve here with SmartCrowd. We're here to make real estate investing easy for people. So at the point when you actually invest, and once, of course, 100% of the funds are raised, what you actually receive is not only the title deed, but you also receive like the tenancy contract and all of the documentation telling you exactly who that tenant is. So you're effectively the landlord, right? So you get full disclosure in terms of who's in your property, the ownership. And so all that is sent to you, and all of that's also in your dashboard, right? In your portal. So everything is online, it's digital, it's easy, it's accessible. That's what we're trying to achieve over here. So I think one of the questions from Ahmad right now as well, and he's been very active. Thank you, Ahmad. We really appreciate all these questions. Is the minimum time to hold to cover your fees? So minimum time to hold. So we don't have a minimum time, right, Ammar? I mean, so that's one of the things that Ammar mentioned earlier. We don't have a minimum time. Essentially, you are a property owner, right? I mean, if you wanted to buy a property, you can buy it and you can sell it as you wish. One of the things that we are seeing, though, in Dubai in particular, and this is something that I'll touch upon because, again, at SmartCrowd, we want to be super open, super transparent, is a lot of people keep saying, well, the property prices are going down, right, Ammar? Yeah. So why would I want to invest in a market like Dubai when property prices seem to be depreciating?
Okay, so I guess there's a very simple way to look at this is, Hassan, if you went to the mall today and you saw a pair of sneakers and they were $100 or 100 dirhams, and then you went to the mall tomorrow and that same pair of sneakers was 50 dirhams. Yeah. Which pair of sneakers would you pay for?
Obviously, I mean, I'd go for the 50 dirham one. If it's the same sneakers, I'd be a fool not to, right?
I mean, I think one of the basic concepts of investing is you buy low and you sell high. So when the market is down, that's usually the best time to invest. And I think you'll find this with a lot of successful investors is they actually save capital for market downturns, and that's usually when they invest their money, because really you're buying everything at a discount, and which is what I find you're doing in Dubai right now is prices have been dropping. So if you invested in 2014, you probably wouldn't be in a great situation because you'll be like, I'm losing money. But you guys are actually coming in at a great point of entry, really, because prices are going to go up and you're getting it at a great price.
Exactly. So I think this kind of ties in back with what you mentioned earlier. Like many other industries as well, real estate is cyclical, right? So if it's cyclical, over time, though, you're still going to see it kind of the slope, if I get super nerdy as well. I mean, it's not a super technical term, but you're going to see a upward trajectory over time.
Exactly.
Right?
Exactly.
And I think that's the key thing with, especially with something like SmartCrowd, is we're not here telling people that, you have to purchase a property that you cannot afford. We're just saying that it might be something you want to explore and invest in as part of your wider personal investment portfolio, because you can invest as much as you can afford today and kind of hold that off for a few years at least, so that you can reap the benefits of real estate in general. Because one of the questions I received as well was, well, can I kind of flip properties on SmartCrowd? So what would you say to that? I know it's a funny question, but we get these questions asked all the time.
I mean, I guess technically you could. If you invest in one property, you could list your shares for sale again, get your money back, and then do it that way. But I probably wouldn't recommend that. It seems like a lot of work, and
it does seem like a lot of work.
I don't know what the benefit would really be. Again, I would say treat this almost like your own apartment. Treat this as a property investment. Look at medium to long term. That's usually where you're going to get the most benefit. That's where your fees are going to start working for you, because that 1.45 starts looking very small if you invest for 10 years, because it's a one-time fee, right?
Correct.
So the longer you're invested, really your fees get less and less every single year, because it's a one-time fee. So if you pay a one-time fee over a year, it might seem like a lot.
Correct.
If you pay 1.5 once over 10 years, it doesn't seem like a lot.
So one of the other questions, and that's thank you for touching upon that, Ammar. So one question we got earlier, which I'll kind of tie this in as well, was, and this was a very general question, was if I invested $20,000 into SmartCrowd, what could I expect as a return?
It is a bit of a general question, because when we bring it back to it, you guys are choosing the property.
And I think that was Ammar as well, to be honest.
Yeah, Ammar, I guess I'll speak to you directly here, but again, it kind of depends, because you get to choose your properties. Like I'm not choosing your property. Hassan's not choosing your property, so you get to go on the platform and choose your own property. But looking at the platform, the average returns have been between 6.5 and about 8.5 annually.
Yep. So
it could vary between then. You get to choose which property you invest in, so that's what your return's going to look like.
Yeah. So one of the questions is then, if it's 20,000 and I'm getting about, let's say, 8%, right? Okay. So that's shy of 2,000 dirhams a year, correct? That's approximately what it comes down to. Yeah. And of course, when people look at absolute numbers, right, you might say 20,000. Oh, geez, I'm putting in a lot of money and I'm getting 2,000, right? But there's an opportunity cost, which I think people don't understand when it comes to money. It's time value of money as well for a lot of people that might not understand or might not be familiar with finance in general, which is perfectly fine. Is what are the alternatives then, right? That's the thing. Because let's say if you were to put your money and keep it in a savings account, how would that compare to something like SmartCrowd?
So I guess I'll be very blunt. A saving account doesn't actually keep up with inflation in most countries. So inflation usually varies in most developed countries anyway, it's between 2 and 3%. Most savings accounts usually pay you, if you're lucky, between 1 and 2, but it's usually under 1%. Yes. Yeah. So say if you left in a savings account, you're earning 1% and inflation is 3%. That means your money is going to be worth 2% less every single year. So you're losing 2% of your money, leaving it in a savings account. And even when you look at most equities, most bond markets, equities you can get up to maybe 7 or 8%, but you're going to see a lot of fluctuations. Again, my background was in equities, so you will see fluctuations that way. Bond market doesn't do too well, so you're probably 3-4%. Again, there's going to be exceptions. There's going to be years where something's going to do great. There's going to be years something's really going to do bad. But comparative to the other asset classes, when you look at the averages and the history of it, I think this is a great investment overall.
Yeah, and that really hits the nail on the head, right, guys? I mean, we're not here to say that, invest all your money into real estate. Something that Sadiq says a lot to our team, and he really, he's a very open and honest guy, right? He says, guys, I'm not telling you to invest all your money in real estate. It's not a this or that. It's a this and that. And I really like when Sadiq explains it to people that way, because, we're saying definitely invest into stocks, look into bonds, look into all the other alternative investments as well. But do consider real estate because of the advantages it has, especially in terms of reducing your overall risk of your portfolio.
Exactly.
And it, in fact, also optimizes your earnings. Yeah. So one of the things that one of the questions that we're receiving right now is, fine, we put properties on the platform, they give rental income. Do we do short-term holiday homes, or do we only do, let's say, long-term tenancy contracts, Ammar?
Yeah, for sure. So, guys, it really depends on the situation. We do have a couple of properties that we have used holiday homes for. As you guys probably know, Dubai has different regions and it's different demographics in the regions. So, if we're looking at a property in Marina, which a lot of tourists come in, they're looking for short-term rentals. We do have one for holiday home. I think we just put one up for holiday homes.
Yeah.
So really, what we try to do is we try to maximize the investment for you guys. So if holiday homes is the way to go, that's what we'll do.
Yeah. Okay.
Right.
Yeah. So exactly. So guys, it's various different products as well when you effectively look at it in terms of residential real estate, right? You do definitely have those longer term tenants as you would expect as a traditional landlord, but we do also have those holiday homes as an option. And of course, from a yield perspective, from a turnover perspective, they are generally a bit higher.
Exactly.
One question we're receiving right now is SmartCrowd versus a REIT. So for those of you who might not know, a REIT is a real estate investment trust, right? So, I mean, REIP sounds cooler, right? So tell us, Ammar, how is SmartCrowd different than a real estate investment trust?
Yeah, so really, real estate investment trust, it's basically a fund that invests in real estate. I think the major difference is you guys are owners of this real estate. In a REIP, you're not. So you have no say over the underlying assets of your REIP. Where here, there is physically a building in Dubai that your name is on. Where a REIP is basically they invest in things for you. You don't know what it is. You have no control.
It's kind of like a mutual fund. Is that the kind of way to look at it?
It's basically, yeah, because in a mutual fund, say somewhere in your mutual fund, you have a Google stock. If you go into the Google office, you don't own one of their computers. Like there's no actual asset holding it. It's just the value of the company. And the REITs almost work the same way. Where with us, you own an actual hard assets. And I think that's very important. Like hard assets, they can never go to zero. They don't fluctuate as much with the market. So there's some real value added by actually owning the property than owning a fund that follows really the industry that you're investing in, right?
Yeah, no, I think that sums it up really well in terms of ownership, in terms of actually having that asset and having full disclosure over the fact that you own it, right? Another question we're receiving right now is, do we only look at residential right now in terms of the real estate investments that we put up on our platform? Are we looking at other, types of real estate investments like commercial, offices, because there's a whole different range of real estate investment choices, multi-unit housing that we can effectively invest in. So why don't you explain to the people right now why we're only looking at residential real estate investing and perhaps what the future may entail as well?
Yeah, so I guess I'll start off with the future. As you guys know, we've been around for about 2 years now. The platform went live last November. So at this point in our journey, real estate basically gave us the best returns. It's the best returns for you guys. And we're trying to keep it short term. Like we're trying to keep our closing periods to about 4 weeks. So we list the property for 4 weeks. Usually they're funded by then. Smart fact, the quickest we've ever closed a property was 5 days. So it was very quick. But that's kind of the reason as we start building the entire crowd, the more community, I think in the future our plans are to expand to other types of real estate. But at this point in our journey, I think it's best for the investors that we look at only residential. And then moving forward, obviously, we're going to expand operations. We're going to look at other investment for you guys. So, of course, as part of the plan, we're just not quite there yet.
Yeah, exactly. So very soon, hopefully, we should have some very good news to share with all of you, in terms of our expansion, in terms of the kind of properties that we're going to put up, and in terms of even investors, even abroad, right, outside of the borders of the UAE.
Okay. So, Hassan, looks like we got another question here.
Yeah.
So, will we benefit if their ROI increases later on or vice versa?
Well, yes. I mean, simply. I mean, if your return on investment, let's say, okay, hypothetically, you're receiving, 8%, right? And that's very good from a real estate perspective. Of course, if you look at mature markets, you're going to be looking at somewhere around 5 or 6% if you're lucky, right? Around somewhere around there. So 8%. The key thing with real estate in general is, of course, the yield can go a bit lower, but as Ammar said, your actual underlying investment, which is the hard asset, is never going to go down to zero. Right? And especially if you have the appetite to hold it for a longer period of time, and we advise 5 years. Of course, we don't have a crystal ball that we're looking into. But if you have the appetite to hold it up for about 5 years, chances are, we can't guarantee anything. Of course, we're not here to guarantee results, but chances are that the property price is going to appreciate. Okay. So you're actually going to end up making more than that 8%, right? If you purchase something for 10,000 dirhams as an example, you hold it up for 5, 6, 7 years, it starts giving you regular rental income every year for, let's say, 6 or 7 or 8 years. And then at year 7 or 8, you dispose of it and you choose to sell it off. Now you've made more money. So when you calculate all that together, it actually becomes higher than 8%, doesn't it?
Exactly. And all right, looking at another question.
We've covered this, but we can talk about this in terms of proof of ownership, right, Ammar? So do you want to tackle this one?
So I think we're answering Rayan. So Rayan, basically proof of ownership at the time of investment, you're going to get 2 documents from us. You're going to get the title deed, basically from the Dubai Land Department. When you look up that title deed, that property is going to be owned by the SPV, and you're going to be the owner of the SPV. Now, you're also going to get a shares document, which shows how many shares you have in the SPV, and it shows what percentage of the property you own. So together with those documents, you can actually go on their websites, look this up, and it'll show you as the owner.
Right, and it's as Ammar said, it's public information as well. You can go into the DIFC register, which is public information, put in the name of the SPV. You're going to see the names there, the shareholders. It's all very clear, very transparent, and you're the rightful owner of the property, which is fantastic.
Yeah, exactly.
Right. So I think we've answered that question. I think we'll take it. If you guys have any more questions, I think there's a few questions that aren't coming in. We'll just wait for another minute or so.
Looks like the security of the investment. So how are your funds secured? So I guess that kind of plays off if I think I saw somewhere back there what happens if something happens to SmartCrowd, which I'll knock on wood.
What if we don't exist? Right? What happens?
No, 100%. So really when you guys invest in SmartCrowd, the way it's set up is SmartCrowd has its own operating account. That's really how we run our business. And then we have an escrow account, a completely separate account where all the clients' funds are basically held. Now, you don't have access to the escrow account. We only have access to our own account. So if anything happened to SmartCrowd, your account is completely safe. Now, basically say if you own shares and SmartCrowd stops to exist. What would happen at that point is, since we are regulated by the DFSA would appoint a new administrator. And if you guys are the shareholders and you don't happen to like that administrator, you can vote to appoint your own. So again, going back to the company analogy, you guys are the owners of this company. We're the CEOs. So sometimes CEOs get fired and you can hire a new CEO. So you guys have that power as well.
But hopefully you won't need to fire the CEO, right? I mean, we're super proud of the fact that what we've been able to accomplish. I think we don't mention this enough, and I think we might have even missed out on this today, was the fact that we're the only regulated real estate investment platform in the Middle East, right? Yeah. So it's the only one that's allowed to do this. Of course, Sadiq went through an enormous amount of paperwork, he went through a lot of, I'm not going to say struggles, but he had to go through a lot of hurdles to definitely make this a reality. And we're super proud of the investors that we have on our platform. One cool fact for all of you is that, over 70% of our investors on the platform actually choose to reinvest with us.
Yeah, so we must be doing an okay job for people to keep staying with this platform and everything, and we're super happy with it. I think if you ever contact SmartCrowd, you're probably going to get a hold of one of us anyway. So anytime you talk to us, we basically send the same message as well. We're very approachable. You can speak to us anytime. So yeah.
Yeah, exactly. I mean, Ammar is more popular, of course. He's the one who gets his face on social media, and it goes everywhere. And I just get kind of, flung in there last minute with no credit whatsoever. But that's perfectly fine. We're a team, and that's how we do things around here. True. So if you guys don't have any more questions, I think we'll probably leave it at that for tonight, right? I'm sure, let it sit. Of course, I'm sure you guys will have some more questions. As I mentioned earlier, please do register, right? Sign up, leave your name, your email address. We can get in touch with you there, of course. What we'll also do is we'll give you a free gift for attending our live webinar with us for the first time. So we'd really appreciate that. Of course, there's a survey there too. So please do let us know how we did with our first live webinar. And if you've got any feedback in terms of what we can do to improve moving forward.
Also, guys, just got this news from our back end. Please subscribe to our channel because we're going to Like you hear on all the YouTube
Yeah,
stars.
YouTube stars. Yeah, we're not there yet, guys. We'll figure a way out. But do subscribe to our channel. You know, we're going to be putting out more videos, more content, of course, not just in terms of real estate, but personal finance in general. Something that will hopefully add value to you guys. So do that. Make sure to do that, and we'll definitely be in touch with you guys moving forward.
And last thing, another thing I'm going to bring up, which Hassan doesn't know about yet, but in the comments in the future when we are doing these podcasts, we're going to start bringing guests. So if there is any special guests you guys would like to be on the podcast, somebody that you think could bring some expertise, something you want to know about, please list some names. We will reach out to them and hopefully try to get them on the podcast and get them part of the community.
Yeah, maybe they don't want to talk. Well, but if they want to talk to us, right? We'll try and get them. I mean, I don't know how popular we are, but we'll try and make it happen for you guys, right? So on that note, I think we're getting one last final question, and perhaps we might have to answer this one. Let's see. Man, Adam, can you type it any slower? Are we investors? So that's a good question, Ammar. Are we investors in SmartCrowd, or are we investing in the properties that are listed here on our own platform?
Yeah, so currently we have put in some investments, but also there was some regulation around if we're allowed to invest in our own platform. So there is a conflict of interest. So it's kind of up in the air, but as soon as that gets figured out, we will be investors. But it's hard for you to invest in your own company. So there's a little bit of conflict of interest that way.
Correct. Especially in terms of the products that we put out, right? Think of it this way, right? I mean, we are doing the due diligence and analysis on the real estate investments for you. So of course we don't want there to be any bias there, right? So if it's something that we really want to invest in personally, of course we wouldn't want to put that up and kind of push on that bias towards you guys so that you invest in the same properties that we want to invest in personally. Exactly. But having said that, of course, you know, there's obviously certain elements there that we need to be a little bit more careful of. Exactly. But definitely, I mean, we definitely think it's a great product. We wouldn't be here if it wasn't. So we'll leave it on that note for tonight. Right, Ammar?
Unless anyone has any questions, you can quickly type it up. We'll give you
like last final seconds before you want to do that. Oh no, I think that's fine. All right, perfect. So thank you, everyone, and we look forward to hearing from you. Once again, register, subscribe, do complete the process. You know, registration is completely free, of course. If you complete the whole registration, I think I need to mention this, you get access to more information on our platform.
Exactly.
Super easy, guys. It's just some documentation for those of you that are within the UAE. Of course, investors or those that want to invest from outside the UAE, we'll have some very good news for you very soon. So hopefully we can share that with you. And until next time, good night, guys.
All right, take care.
Bye.
Oh.
Yeah. Or I'm off.
All right, so I'm still here since I guess we don't know how to turn it off, but I saw a couple more questions come in. Let's see. My question about towers, I didn't quite get the question about towers. What is your gift? Please fill out the survey and everything, and your gift will be sent to you. I promise you're going to love it.
We do the same concept for a whole tower.
Oh, am I still on?
Whole building. Are you seeing that? Yeah.
Okay, will we do the... Okay, I just got the question from my team. So, will we do the same concept for a tower building? Moving forward, again, we do have plans for expansion. We're going to be looking at office buildings. We will look at entire buildings as... Really, I guess what that comes down to is how long it would take to really fund an entire building. Like, if we put it on there right now, it probably take months. So as soon as our investor base gets big enough, we're going to start looking at bigger properties. We're going to start looking at bigger opportunities. But just right now in the journey, it doesn't make sense. But in the future, we will.
On that note, good night.
All right, take care, guys.